Welcome back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront and generate consistent returns year on year. So the first thing you want to do is pull up any equities underlying in your brokerage platform. We've currently got NVO up at the moment. We've got a position on an iron condor position on NVO, but any underlying equities underlying will do, and you want to navigate over to somewhere where you can see a list of expiration dates for that underlying. So the purpose of this step is to lock in on an expiration date, and we want to see how far out in time that expiration date is. So the one that we choose needs to be between 30 and 60 days out in time. And it also needs to be a monthly, not a quarterly expiration. So the only expiration date that actually fits that criteria right now is January 17th, which is 48 days away. So we can take that information, come over to our watch list, and simply filter out any and all underlyings that have an earnings event over the next 48 days. The reason for this is because we do not want earnings to disturb our trade. We don't want earnings to mess up our deltas, increase volatility, etc. And we also want to filter out anything with a low liquidity rating level. And now you'll be left with something that looks like this. Obviously, it probably won't have the exact same underlyings on. This is just a pre-made watch list. You can use any watch list, it doesn't matter. And I personally like to list or order the list from high to low IVR. We want to sell when IV is high and play the contraction back down to the mean and even further below, hopefully. So with that being said, at this point, we simply just go down the list and we just see what would fit well in our portfolio. And we want to make sure that we are selling something with an IV rank of over 50 ideally. However, sometimes over 30 can be considered okay as well. So EWZ is actually standing out to me at the moment. It's trading at about $25. The market is closed. It's a Saturday, so take the prices with a pinch of salt. But you should still be able to get the feel of what we're doing. We're still going to mock up a position. So EWZ is trading at just over $25. It's got an IV rank of 40. It is an ETF, which is nice. It's got an absolute IV level of 29.7%. So if we just come over to January 17th on the EWZ expiration date, as you'll be able to see here, we are presented with the options chain. Now the spreads are quite wide because obviously the market is closed. It's a Saturday. However, in real life, or not that this isn't real life, but during during hours when the market is open, the spreads won't be as wide as this. But we're still going to just mock up a position for example's sake. So we want to sell one call, one put, and we want to sell them. We want to sell the contracts anywhere between 15 and 20 deltas out in time, or away from the current price. Sorry, 22 deltas seems to be okay on the call side, and we've got a 22 delta or 20 or 20. Sorry, seven. Sorry, I'm looking at the wrong column here. We've got a 23 delta. I was wondering why that was so far away. We've got a 23 delta over here. So that gives us a net positive 1.69 deltas on the position overall. We would collect $72 up front. This would actually be higher if the market was open, because as you can see here, the spread is so wide. So you have to take this number with a pinch of salt. So this actually would be higher if market was open. But even still, not bad. $72. Our broker is going to require just under $350 in buying power. So even with the market being closed, it still is not a bad return on capital. It's not bad at all for a naked position. We've got a 68% probability of profit and an 81% chance of hitting 50% of max profit over the next 48 days. So very, very high probabilities of success. Now, normally at this point, I would show you how to manipulate this position to fit inside any size portfolio. But because it requires such a small amount of buying power in the first place, I would recommend just placing this position naked. You don't need to buy any longs to cover yourself or to cover the shorts. $350 should be able to fit in pretty much everyone's portfolio. So with that being said, if you wanted to know how much buying power you should be allocating to your positions, you can use a free position sizing template that we put together. The link is in the description. Click on the free position sizing template. It will take you to this, and then the way it works is you enter in the size of your portfolio. Let's say if it was a really small portfolio, and then you enter in what the current VIX level is. Let's say if VIX was really low. Everything below will then be automatically calculated for you with an explanation here below. And it will tell you exactly how much buying power you should be allocating to any single undefined risk position, defined risk position, how much of your portfolio you should be allocating to short premium strategies in general. And as you can see here, for an undefined risk position, $5,000 with a very low VIX level, $350 is the maximum you should be allocating. That fits perfectly inside this EWZ trade. So even for small portfolios, you don't really need to cover that position. As long as you follow this, you'll be fine over the long term. If you want to learn in more detail about what we do and how we do it, again, link in description. This time, click on EDS Premium and get yourself signed up. Inside, you will have access to our portfolios that will allow you to see the positions that we're placing, the adjustments that we're making, how we're managing risk all in real time. You will also have access to a full course that teaches you everything you need to know from start to finish. No prior knowledge is required. And if you get stuck, it is a private community, so you can speak with myself directly or with other like-minded individuals. And there is a 100% money back guarantee. So once you have studied our full course for at least 6 months and followed our trades, if at that point you haven't been profitable, then we will work with you for free until you are, or you can simply request a full refund. So it's completely risk-free on your part. And right now it is £1 a month to join. The price will be increasing. However, once you're in, the price is locked in for life. So you are rewarded for getting in early. And with that being said, I will see you guys on the inside.